and gentlemen, good day and welcome to the Q4 FY21 earnings conference call of Sun Pharmaceutical Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nimish Desai, Head of Investor Relations team. Thank you, and over to you, sir.
Thank you. Good evening and a warm welcome to our fourth quarter FY21 earnings call. I'm Nimish from the SUNPHARMA Investor Relations team. We hope you received the Q4 financials and the press release that was sent out earlier in the day. These are also available on our website. We have with us Mr. Dilip Shanghvi, Managing Director, Mr. C.S. Muralidharan, CFO, Mr. Abhay Gandhi, CEO of North America, and Mr. Kirti Ganorkar, CEO of India Business. Today the team will discuss performance highlights, update on strategies, and respond to any questions that you may have. As is usual, for the ease of discussion, we will look at the consolidated financials. Just as a reminder, the call is being recorded and the replay will be available for the next few days. Call transcript will also be put up on the website shortly. The discussion today might include certain forward-looking statements, and this must be viewed in conjunction with the risks that our business faces. You are requested to ask 2 questions in the initial round. If you have more questions, you are requested to rejoin the queue. I also request all of you to kindly send in your questions that may remain unanswered today. I will now hand over the call to Mr. Shanghvi.
Thank you, Nimish. Welcome and thank you for joining us for this earnings call after the announcement of financial results for the fourth quarter and full year of FY21. I hope you and your family are safe and healthy. Let me discuss some of the key highlights. Consolidated sales for the quarter were at 84,314 million, recording a growth of about 4.4% year on year and a decline of 4% quarter on quarter. Most of our businesses have done well over Q4 last year, with India, emerging market, and rest of the world businesses as the key growth drivers. We continue to focus on growth, operational efficiencies, and business continuity. For the full year FY21, sales were 331,392 million, recording a growth of about 2.5%. All of you will remember that last year's sales included a one-time special business in the US, which is not reflected this year. All our businesses have recorded growth for the full year despite the challenges related to global COVID-19 pandemic. The major impact of the pandemic was felt in the first half of the year as many countries imposed a lockdown to counter the spread of COVID-19. Second half witnessed a gradual recovery as most countries gradually lifted the lockdown restrictions in a phased manner. For SUNPHARMA, the sales in the second half were higher by 8% compared to the first half. EBITDA was up by almost 13% and adjusted net profit was up by approximately 17%. Let me now update you on our global specialty business. For fourth quarter, our global specialty revenue was approximately $139 million across all markets. Specialty R&D accounted for approximately 23% of our total R&D spend for the quarter. For the full year FY21, global ILUMYA sales were at $143 million, up by about 51% over last year. We've recorded a good growth despite the closure of doctors' clinics in the US in the first half of the year, but supported by gradual recovery in the second half. Abhay will give you more details on the specialty business later. I will now hand over the call to Murli for discussion of the fourth quarter financial performance.
Thank you, Mr. Shanghvi. Good evening, everyone, and welcome to all of you. Our Q4 financials are already with you. As usual, we will look at the key consolidated financials. Q4 sales are at rupees 84,314 million, up by 4.4% over Q4 last year. Material cost as a percentage of sales was 26.6%, lower than Q4 last year due to product mix and other efficiencies. Other expenditure was at 30.2% of sales, lower than Q4 last year, mainly due to lower selling and promotion expenses in US. As indicated in our past earnings call, these expenses will see an increasing trend in future once the market situation reaches full normalization. Forex loss for the quarter was rupees 107.8 million compared to a loss of rupees 1,420.7 million for Q4 last year. As a result of the above, EBITDA for Q4 was at rupees 19,568 million, up by 55.8% year-on-year, with resulting EBITDA margin at 23.2% compared to 15.5% for Q4 last year. Let me now briefly discuss the exceptional items for Q4. Taro has made a $80 million additional provision related to its ongoing multi-jurisdiction civil antitrust matters. Further, in Q4, the Court of Justice to the European Union issued the final judgment and upheld the European Commission's decision dated June 19, 2013, that a settlement agreement between Ranbaxy UK Limited and Ranbaxy Laboratories Limited with Lundbeck relating to citalopram was anti-competitive. Ranbaxy had made a provisional payment to the tune of euro 10.3 million on 20th September 2013. Since there are no further rights of appeal, this amount of rupees 895.6 million has been debited to the consolidated profit and loss account in Q4. There is no cash outflow related to this as the amount was already paid. Exceptional tax for the quarter is on account of recognition of deferred tax asset amounting to rupees 1,212.3 million arising out of the Taro settlement. Excluding the impact of exceptional items and deferred tax, the adjusted net profit for the quarter was at rupees 13,430.7 million, up 103% over adjusted net profit of Q4 last year. Reported net profit for Q4 was at rupees 8,941.5 million, up 124% year-on-year, while reported EPS for the quarter was rupees 3.73. Let me now discuss the key movements versus Q3 FY21. Our consolidated sales were lower by 4% quarter-on-quarter at rupees 84,314 million. Material cost and staff cost at 26.6% and 19.9% of sales respectively are flat over Q3 FY21. Other expenses at 30.2% of sales are higher than Q3, mainly due to increase in SG&A across markets. We had a forex loss of about rupees 107.8 million for Q4 as against forex gain of about rupees 716.3 million in Q3. As a result of the above, EBITDA for Q4 at rupees 19,568 million was lower by 16.8% compared to Q3. EBITDA margin for Q4 was at 23.2% compared to 26.8% for Q3. Adjusted net profit for Q4 stands at rupees 13,430 million, was lower than the net profit of Q3 by about 27.5%. Now we will discuss the full year performance. The full year FY21 sales were at 331,392 million, a growth of 2.5% over FY20. Despite the nearly 10% sales degrowth recorded in Q1 due to the global pandemic, we have been able to recover sales growth in subsequent quarters and have achieved an overall positive growth for the full year. Also, as indicated in the past, the full year of last year included contribution from a non-recurring special business in the US, and hence the year-on-year sales numbers are not strictly comparable. Excluding this one-time sales contribution during the last year, the year-on-year sales growth would have been higher. Material cost as a percentage of sales was 26.2%, which was lower than the same period last year, mainly due to product mix and efficiency initiatives. Staff costs at 20.7% of sales were higher than last year, mainly due to annual merit increase, addition of field force in India, impact from other regions, and include some currency impact. Other expenses were at 28.6% of sales, lower than the same period last year, mainly driven by reduced marketing, selling and distribution, and traveling expenses across markets. As a result of the above, the EBITDA for the full year was at rupees 81,324 million, a growth of 25.5% over the same period last year, with resulting EBITDA margins of 24.5% versus 20% of last year. Excluding the exceptional items for both FY21 and FY20 and the non-recurring tax credit for FY21, the adjusted net profit for FY21 was at rupees 59,317.8 million, up 47.4% year-on-year, with resulting net profit margin at 17.9%. Reported net profit for FY21 was at rupees 29,038.2 million, with reported EPS at rupees 12.1. The company has repaid debt of about $580 million in FY21, the benefit of which is visible in the reduction in finance cost. As of 31st March 21, the ex-Taro net debt stands approximately $179 million. Let me now briefly discuss Taro's performance. Taro posted Q4 FY21 sales of $148 million and adjusted net profit of $31 million. On a year-on-year basis, sales for Q4 FY21 were lower by 15.3%, while the adjusted net profit was lower by 42.6%. For the full year FY21, sales were at $549 million and the adjusted net profit was at $141 million. I will now hand over to Mr. Kirti Ganorkar, who will share the performance of our India business.
Thank you, Murli. Let me take you through the performance of our India business. For Q4, sales of branded formulation in India were rupees 26,709 million, recording a growth of 12.9% over Q4 last year. India business accounted for about 32% of consolidated sales for Q4. For Q4, while the chronic segment continued to show steady growth, the subchronic segment witnessed a recovery. The acute segment is still facing some challenges due to lower incidence of infection and less patient flow to the doctor's clinic. For most part of Q4, we saw a normalizing trend and pharmaceutical companies had started spending on traveling, branding and promotion. Travel costs for MRs increased in Q4. However, there is some uncertainty now given the significant increase in COVID cases on account of second wave and the lockdown in many parts of the country. For Q4, we launched 31 new products in the Indian market. Let me now discuss our response to the COVID-19 pandemic. We had approach to fight the pandemic. The steps that we took include ensuring continuous supply of medicine to the patients, supply of multiple therapeutics used in the treatment of COVID-19 like remdesivir, favipiravir, itolizumab, ivermectin, methylprednisolone. We have also ramped up production of liposomal amphotericin B, which is used in the treatment of black fungus post-COVID complication observed in patients. SUNPHARMA was the first company to develop generic liposomal products in India. We have donated COVID medicines and many other items like PP kit, masks, sanitizer, gloves, etc. At the same time, we have entered into two different licensing agreements, one with Eli Lilly for baricitinib and another with MSD for a drug called molnupiravir to help alleviate the burden of COVID-19 in India. SUNPHARMA is the largest pharmaceutical company in India, holds approximately 8.2% market share in the domestic market as per March 2021 AIOCD AWACS MAT report. For Q4, our market share was at 8.3% as per AIOCD X. We also continue to remain the partner of choice for in-licensing of products, given our number one position in many therapy areas, including therapies for the treatment of COVID infection, coupled with our large distribution network. I will now hand over the call to Abhay.
Thank you, Kirti. I will briefly discuss the performance highlights of our U.S. businesses. For Q4, our overall sales in the U.S. degrew by 1.3% over Q4 last year to US $370 million, mainly due to decline in Taro sales as the market is not yet fully normalized. U.S. accounted for about 32% of consolidated sales for the quarter. Our specialty revenues in U.S. have grown over Q4 last year, mainly driven by Ilumya, Cequa, and Absorica LD. For the full year FY21, the specialty business has grown over previous year despite the sharp reduction of sales in Q1 on account of the global pandemic. Growth drivers include Ilumya, Cequa, Absorica LD, and Yuansa. As you may be aware, the generic of Absorica has entered the market in April, and simultaneously, we have also launched our authorized generic. Doctors' clinics have been open during the quarter, although the situation is yet to fully normalize. However, compared to the first 9 months of the year, the travel and branding and promotional costs increased in Q4. Let me now update you on our U.S. generics business. As you have all seen, the U.S. generics business continues to be competitive. The Sun ex-Taro generics business has recorded year-on-year growth driven by a combination of new launches, better supply chain management, and incremental upsides from shortages. I will now hand over the call to Mr. Shanghvi.
Thank you, Abhay. I will briefly discuss the performance highlights of our other businesses as well as give you an update on our R&D initiatives. Our sales in emerging markets were $192 million for Q4, up by about 2.7% year-on-year. The underlying growth in constant currency terms was higher at 5.3%. Emerging markets accounted for about 17% of total sales for Q4. Formulation sales in rest of the world markets, excluding US, emerging markets were $163 million in Q4, up by about 5.5% over Q4 last year. Rest of the world markets accounted for approximately 14% of consolidated Q4 revenues. API sales for Q4 were at 4,357 million, down by about 9.9% over Q4 last year. Our R&D efforts spans across both specialty and generic businesses, and we continue to invest in building the pipeline for various markets, including the US, emerging markets, rest of the world markets, and for India. Consolidated R&D investment for Q4 was at rupees 5,571 million, accounting for 6.6% of sales. For the full year, R&D investment was 21,499 million, accounting for about 6.5% of sales. Our current generic pipeline for the US markets includes 94 ANDAs and 9 NDAs awaiting approval with the US FDA. In addition, we are evaluating development for some biosimilars, which can be classified amongst the third wave of biosimilars. The board has proposed a final dividend of rupees 2 per share for the year FY21, in addition to the interim dividend of 5.5 per equity share declared on January 29, 2021. And lastly, on the guidance for FY22, given the uncertainties of the pandemic in the near term, we are refraining from giving a guidance for FY22. However, all our businesses are well positioned, and our endeavor will be to grow all of these businesses, notwithstanding the near-term uncertainties related to COVID-19. With this, I would like to leave floor open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question. On the specialty revenue in the quarter, there seems to be a moderation on a quarter-on-quarter basis, even though data on ILUMYA shows good prescription traction, sequencing improvements. So some color on what drove the moderation, please?
I think it's a combination of 3 factors. Like I said on my last call, December, which is the end of the financial year in the US context, there is a higher buy-in. Also in Jan, a lot of insurance sets in or resets rather. Patients change either the provider or the kind of insurance they have, and then the verification process takes a little more time, and it goes into Feb before really sales normalize. And the third, I think, which is also important for us to remember, is that during the period of December, the pandemic situation in the US was into what we see today, really new cases over 300,000 almost on every single day. The combination of 3 factors I'm quite satisfied that we are well poised to deliver on our own objectives.
Okay, understood. And one other question on specialty. If I look at the traction in CEQA, there seems to be some let me say the market share seems to have stabilized over the last few weeks and months. Is there anything specific that we are seeing there now that US is open? Are we not seeing enough traction on CEQA?
No, I think CEQA will continue to grow, and my personal sense is that doctors have accepted the product. The team is also now able to make a lot more face-to-face calls and participating in live conferences, which for a new company I think is important to be able to be seen by your customers. So I think that will help us. So in the initial phase for a newer product to be able to do this all in a virtual environment was a challenge. That's gradually improving in the US. So I feel pretty good about the product now.
Okay. So you expect continued momentum on the market share front?
We certainly hope so.
Understood. Thank you so much, sir.
Thank you, Neha.
Thank you. The next question is from the line of Nithya Balasubramanian from the Bernstein Research. Please go ahead.
Hi, thank you. So my question is also on the US portfolio. So the first one is on Taro. So we have seen that for the last several quarters, it's continued to contract both at the top line and the bottom line level. So just want to understand what is the outlook for the business? How do you see the shaping over let's say, the short to mid-term period?
So Uday, in his calls on Taro, has actually been speaking to this. The only thing which I will not, so on Taro I will not get into, but I can see that overall in the dermatology portfolio and market, there is definitely lesser patient flow even up to the end of the year. Taro, of course, has a lot of products which are either number one or number two with positive high market share. And therefore, the pressure on Taro to hold on to its market share is higher. So I think it's a combination of all this. But we recognize your point, and I think the task for us as a company is to try and find ways to grow the Taro business as well.
So I think all of us are hoping that things will hop back to normal at some point of time. And I think you also commented that clinics have started operating. So if COVID is not a factor anymore, do you continue to see this as a business will continue to shrink because prices will keep eroding? Because the commentary we heard from Taro as well was that the environment is not great. Do you see this resolving at some point of time?
So I will speak to the dermatology segment. I mean, even today, if I read different reports, and different reports obviously will quote numbers, but I think the maximum number that I see of patient footfalls returning to the doctor's clinic in derm is around 70%. So that is the addressable market now in terms of the patient visits to doctors in the derm space. So that's a challenge that businesses which are derm will continue to face. And we hope going ahead the situation will improve because of the higher rate of vaccination in the US and certain loosening up of social distancing norms which are now taking place. But that's ahead of us.
Got it. Thank you. Can we also assume that as I think Levulan was a bit of a drag in FY21 for you for the same reasons. So now that again volumes are picking up and patient footfalls are increasing, is that likely to become a meaningful contributor again?
So I clearly saw a little bit of an uptick in the fourth quarter as compared to the previous quarters. And going ahead, of course, if the situation normalizes in terms of elective surgeries and procedures, then I think Levulan should pick up. But will it happen? I think is anybody's guess. I mean, the situation is fluid, not just in the US, but I think globally.
Got it. Thank you so much. I have one last one on biosimilars. It was briefly mentioned in the opening remarks. If you can throw some color on what you meant by third wave. Are you looking at it more as a portfolio which would support your specialty portfolio, or is this a standalone business that you're trying to develop?
No, I think we are looking at products which have significant future patent expiry dates, so that we can be amongst the first approvals. That's the focus and priority. And that's not the only. There are multiple priorities, and also finding a way by which we can leverage our presence in market so that we can successfully build a biosimilars portfolio.
Understood. Can we take that to mean it's beyond 2028, 2030 time frame? That's the kind of launch dates you're looking at?
That's correct.
Thank you so much.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Just wanted to understand the scale-up in R&D from here, given that we have started additional trials. So how do we think the R&D and other expenses going forward for the year 22 and 23?
So they will gradually go up. See, two things will happen. One is total R&D expenses will go up, and within that, the percentage of the money spent on innovative R&D also is likely to go up. So I think we've not, because since we're not giving any specific guidance, but generally we've tried to keep our R&D spend between or let's say 8 to 9% of our turnover. This year, because of the significant disruption in the clinical studies, the clinical trial spend this year was much more subdued than what we would have liked it to be.
Some color on other expenses in terms of the scale-up is largely done in terms of specialty, or when we see the impact of lockdown and pandemic going down, it will again come up?
So general guidance is that what you see as a significant reduction in the marketing spend in all markets is likely to go up. We will try and see that we don't go back to the previous percentage spend, but in some markets that may not be possible. For the US, maybe Abhay can respond.
Okay, thank you. And second question on ABSORICA. So how we are seeing in terms of, as you said, April we have started to see competition. Is it since it's a single player entry, have you seen a bigger impact or it's a very marginal impact?
So we don't have clarity because this was launched only towards the end of April. May has not closed for me, so difficult to assess impact. Fingers crossed, and I'm watchful of what is likely to happen. However, having said that, we also launched our own authorized generic, and we have locked up a few customers whom we had targeted for our share of the market.
Okay, perfect. I said ask this because you just made a comment on guidance that you are well positioned to grow across business segments. So we include the specialty as well. That's it.
Yeah, Abhay, would you like to respond?
No, I'm not clear what the question was at the end.
Despite the competition in ABSORICA, and AG coming in, which I assume would be, in your base business, US-based business. The question was, since we made a comment on guidance, well positioned to grow across.
Lost you again. Sorry, I lost you again. The question was, can you repeat, please?
Am I audible now, sir?
Yeah, much better. Thank you.
So question is on, the growth guidance, well positioned to grow across business segments on the backdrop of, the ABSORICA generic competition coming in.
Right. So, if you're talking about, if I understand you correctly, you think that will the specialty business grow despite the competition we have in ABSORICA. Is that the question?
Yes, sir.
Yeah, I think we will be. That's the idea. That's the plan, and that's how we are approaching the whole issue. Absorica is one of the products that we have in the specialty businesses. There are avenues and opportunities for us to find ways to grow in other products, and of course, as an organization, we also have to be always looking at another BD opportunity. So that we will continuously evaluate and keep our eyes on any good opportunity that comes our way.
Right, sir. Okay. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Thank you very much, and greetings everyone. So first question is on Ilumya. Can you share, some color on the repeat prescribers and repeat patients in this? How's the underlying dynamics?
It's a great question, Sameer, to be honest, but I really do not have that kind of granular details because it is not as simple to get that data, and even if we get, it's quite expensive. So in the recent past, internally, we have tried to do our own kind of modeling and made assumptions and trying to come to a certain picture. Even now, to be honest, Sameer, it's quite sketchy as far as I'm concerned. And a lot of assumptions go into it. So for me to give you an answer would never really be correct. So I'm not trying to sidestep your question, Sameer, but I really do not have. I wish I had. That would have made my life much easier. But I don't. That's a fact.
No worries on that, sir. So what will get you to next, $100 million, incremental $100 million on this product in the US? I'm thinking that is it the mining of the current prescriber, or do you think you still need to go out and get more and more doctors in the fold?
As far as I am concerned, it will be a combination of three things. And I think one of the most important things is not mining of customers, but mining of data that we have on the product and be able to continuously, communicating something new to the customers, which keeps the interest alive as far as they are concerned in our conversations with them. So I think that's the first and most important thing as far as I am concerned. The second is continuous involvement of key opinion leaders to give us podium time and speak favorably on the product. And third, of course, is a combination of both mining of existing customers as well as expanding the prescriber base. So I think it's all of these put together, and therefore I think execution by the team on all these fronts becomes so much important.
Okay, great. Thank you so much. If with your permission, one last question from my side. And can you just update us on Halol? Any tentative timelines over there, and how should we think about new launches until Halol opens up?
So I think as we have shared with you in the past, I think we are waiting for the agency to inspect. We've requested for an inspection. Now I think it's up to them to plan and inspect the facility. And hopefully this time we should be able to clear it successfully. That's the focus. I think we are, as I said in the beginning, that we expect all our businesses to do well and grow. So we are also expecting the generic business in the US also to grow. And that's based on the visibility that we have with approvals that we can expect. So in case if when Halol gets approved during the year, then and if we get new approvals, that will potentially add to our plan for growth.
Okay, great. Very clear, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities and Capital Markets. Please go ahead.
Hi, thank you for the opportunity. My question is on Ilumya trial for another indication, psoriatic arthritis. So we understand COVID has disrupted the progress, but can you provide where we are in that indication studies? And when we are expecting to complete the phase 3 and do filing?
So I think we got affected at two levels. One is because the patient footfall in the clinics, which we had already started as a clinical trial site, had come down. So their ability to recruit patients had come down. And the second was the CRO's ability to start multiple new sites. And that also got affected. Hopefully, we've seen some pickup in starting new sites in last few weeks. And hopefully, that should help us during the year. But in this uncertainty related to the recruitment, difficult to give you any kind of specific timeline for the completion of the enrollment. Because I think you have to first enroll the subjects, and then the subjects we have to monitor for a year.
Okay, got it. My second question is on specialty spend. So, some clarification there. So, in earlier communication, you have indicated that we have broadly optimized DTC and other marketing costs for key specialty brands. And you also commented with the US market opening up, we expect these costs to go up. So how should we look at the specialty spend over next few quarters?
The answer would be, I think, sort of Dilip said a while ago. If I look at current trends, I think with more and more doctors allowing in-clinic visits and some of these, virtual conferences going back to being face-to-face and live, cost will increase. However, we'll make every attempt to see that we don't go back to the original level. But in a fluid and pandemic situation, I think as a company and as a team, we need to be constantly agile and nimble to be able to make change in decisions very rapidly if we have to.
Okay, got it, sir. Thank you. Thank you for your answers.
Thank you.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. So my first question is on the US. Is it fair to believe, sir, US portfolio should be seeing a kind of profitable growth in FY22, driven by at least two factors. One is that kind of a steady progress what we are witnessing on the specialty front, and the second part would be possibly bottoming out of the operating underperformance, or bottoming out of the Taro's operating performance, what we have already seen in the recent past. Because what you mentioned, of course, it is correct, so that the prescription trend seems like almost down 29-30% in last entire 1 year period due to COVID in the derma side in the US. But it seems that Taro has significantly outperformed that with a flattish kind of a prescription trend. So is my understanding is correct that we could see, driven by these two large component of the US sales, Taro as well as specialty, can we see a kind of profitable progress on the US business front?
So Taro standalone, when you see the results, they are already a profitable business. And as far as Sun is concerned, we haven't given business line-wise profitability numbers, so difficult to answer your question. But yeah, broadly, of course, yes. I mean, you are in business at the end of the day to be running a profitable business, and that's the objective for any given business.
My point basically was that obviously we will see a sequential volume growth with the opening of the US market, but will that be along with the margin expansion in that market? So basically that understanding I wanted to have by the word profitable focus.
So, I think my answer remains the same. That's the objective, that you increase your margins as you go along. But specific business-wise, we don't give the breakup. So that's the most I can do on this call.
Okay. Just a kind of additional point on that. See, generally what it was understood that the specialty spend was elevated, obviously, in the initial period of the launches. And having seen kind of a ramp up, so we possibly have curtailed the DTC kind of activities for Ilumya, although there was a kind of additional DTC activity for Sequa. But generally, it was understood that the overall specialty spend should see a gradual correction from the elevated level of, let's say, FY20. So are we on that front seeing a kind of a declining trend, although we will see some kind of a normalization in the overall SG&A cost front?
Yeah, I understand. So I have said this in my earlier calls as well. We have now more or less optimized what we need to spend for each product group or a BU. And I think we are comfortable with where we are. And with the expansion of the increase in the top line, therefore I think margin should definitely improve.
Okay. Just second question, sir, on this. Dilip sir, if you can just respond on the COVID side, do you see COVID this as a kind of opportunity by in any manner for SUNPHARMA?
So, in the sense that there is a short-term, Kirti can respond faster, but there is a short-term increase in the business for products which are specifically used in COVID. As on today, I think we are not in vaccine manufacturing or distribution business, and we haven't announced anything as yet. So I think Kirti, maybe you can respond.
Sure. Yeah. So, let's see, we can opportunity for us, and as I said in my opening remarks, and that's products in our portfolio.
Kirti, you're not audible to me.
Yeah, Kirti, you're not audible. You're breaking.
Hello?
Yeah, you are breaking.
Yeah, but you can hear me? Or?
Yeah,
now this is better. Yeah, thank you.
Okay. So what I was saying is we have launched a couple of new products for the treatment of COVID, which includes products like Remdesivir, Itolizumab, and Favipiravir. And last year, by the time we launched the product in the first wave, there were almost by the month of November, December, number of cases were reduced. And then in the second wave from March and April, the number of cases has been increased. So we will get some short-term benefit in this next financial year. But at the same time, we have a good number of COVID portfolio products with us, which are being used off-labels, and they are doing well in coming quarters.
Sure.
Also, so there are products which will give us some benefit, but it would be a short term, and we don't know how long this second wave will last.
Okay. Yes. Thank you. Thanks a lot.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Just would like to understand on the biosimilar front, what kind of investment are we envisaging over next 3 to 4 years on the product development side and subsequently on the manufacturing front?
I don't think we have crystallized this in specifics to be able to respond. But as I see our overall R&D spend, for us to be able to take care of biosimilars both in R&D as well as if I see our annual capex for upgradation, new capacities and brownfield to create a additional capacity for biosimilars. It shouldn't be a big drain neither on our cash flow or on our profitability.
Okay, sir. So previously, we were restraining from getting into biosimilars because of the regulatory or lack of clarity on the regulatory front. Now that is there, but at the same time, we have seen experiences of other companies like biosimilars also having considerable price erosion, despite, in addition to spending significant amount on the development as well as on the manufacturing front. So still, do you see this as a good opportunity over next 4 to 5 years?
Yeah, I think so, because depending again on the product and when you enter the markets, I am expecting that over time with familiarity and confidence that doctors will develop on the biosimilars, we will see increasing percentage of patients being treated with biosimilars.
Okay, so that helps. Thanks a lot. Thanks.
Thank you.
Thank you. The next question is from the line of Sayantan Bhaumik from PineBridge Investments. Please go ahead.
Thank you for this opportunity. Just wanted to understand, we recently invested in this company called ABCD Technologies along with a few other companies. So if you can just give us a thought process on this investment and what do we intend to do with this. That's the first question. And secondly, if you could just elaborate our efforts on ESG and what we have done, how the company has supported the community during this second wave.
Sure. So Kirti, maybe you can respond.
The first. So as indicated in our announcement regarding this development, some of the large pharma companies have come together to form ABCD Technologies, which will further invest in digitalization to make the distribution of pharma product more efficient. That is the objective. Over a period of time, it will result in a better inventory management and ensuring that the pharma products are available to patient at the right time and at the right place.
Will this be some sort of a competitor positioning compared to some of the online pharmacies? Is that something? Is that the intent, or is it just purely a back end optimization?
It's more to make the supply chain more efficient.
Okay.
On the ESG related front, we are working on both the sustainability and the ESG, which has of course covers the energy, the water, and other related aspects as the GRI standards. And we will be coming out with the first edition of our initiatives and the report duly issued along with our annual report in this financial year. Both on the sustainability, the detailed reporting will be done by us.
Okay, thank you.
Thank you. The next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Yeah, thank you for taking my question. Just the first one on the India business. If you can just tell us about the field force as it stands today in terms of either number, as well as the productivity that you are looking at. I think you put it out in the presentation. So just wanted an update on this from a fiscal 21 perspective.
In terms of, you are saying number of field force or?
Yes, number of field force, maybe the PCPM that they are currently today, and where do you think this can actually trend going ahead?
Sure. As we discussed in our last call during the last Jan to March, we have expanded our field force and we have added about 1,000 people in the field, which includes medical reps and managers. So now we are in excess of about 10,000 people, which includes everyone in the field, right from medical rep to all the managers put together. So since we have added the field force last year and then we entered into a pandemic on Q1 and Q2, the performance in the first 2 quarters was not up to the mark, and the field force was also new. They were to visit to the doctors, and that could not happen. But from Q3 and Q4, this new field force could visit the doctors and develop certain relationships. So generally we don't give our PMPM, but what I can say, our PMPM due to expansion was almost flat or slightly lower than what it was in the last financial year. But more important is now this field force is well settled. So in the coming financial year 21-22, we think that we will get a benefit of our expansion and our reach to the doctors, and we'll also see the improvement in PMPM and productivity.
Got it. Very helpful. Second question is on capital allocation priorities. This year looks like we have used some of it towards reducing our debt levels. Right, if I picked up the number right, ex-Taro debt is like 170 million or so. So how should we look at fiscal 22 in terms of capital allocation? And also a related question on what is the capex for fiscal 21 that was reported, and what are we looking at for next year? Thank you.
Murali, would you respond?
So in terms of the capital allocation, as we have maintained in our previous earnings call, our endeavor will be also to become debt-free at gross level ex-Taro. So the 179 million what we talked about, which is standing the net debt, overall gross level what we have posted, will be our endeavor is to by March 22, we'll continue to wind down the debt. At the same time, with the cash what we have, the leverage we have, definitely for the growth of the business, we will be open to investments if any opportunities are attractive for growth, profitable business.
Also capex. He wants information on capex.
Capex for the FY22?
Yeah.
Average in terms of each year overall capex, India around about we do about 200 billion plus across various geographies. So, but this year we have worked out around almost similar number. It will not be much very high.
Got it. Thank you and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Krishnendu Saha from Quantum AMC. Please go ahead.
Yes, hi. Thanks for taking my question. I just had a couple of questions. We talk about Picor, we talk about Apluva LD, but we don't talk about the Sprinkle family, the Tizal and the Elora. What the name, sorry, I got it wrong. Are they not significant enough, or we don't spend much of marketing spend behind them? What is the thought there? How do you see that portion of the portfolio? Because when we talk, we don't talk about anything about them because we launched, but they are especially mentioned in the annual report. So just wondering how the thing is out there, please.
It's a niche segment, and the idea of having this, look at a very specific niche area of it, and especially within that patients who have dysphagia. So none of the products individually will be very, very big products. Our range will be a decent, meaningful range when everything comes to market. And these are coming in tranches and phases, so not everything at one time. So it's a small part of our business, but it's an interesting area to be in because you're genuinely doing something which is needed by the patients in the long-term care centers and those who cannot swallow their medication. So I personally like that segment. Not for the dollar value, but because of what it does for elderly patients.
Right. But do we need a force behind it, sales force, or we just let it be the way it is?
Sorry, can you just repeat?
Do we promote the product, or
yeah, we promote it to and doctors who visit LTC centers. It's a promoted group.
Right. Okay, thanks. And one more question. We have this GLP, we are doing trials on that. Normal scheme of the specialty product. how does this fit in? We do have another before via derma, via ophthalmology. So where does this fit in the whole scheme of things? If say the not trials another 2 years out, this comes out good, and the data was out in the capital situation. So how do we see this product going ahead?
So clearly in India and emerging market, we have presence in diabetology and cardiology. So this is interesting. For large markets like US, Europe, as well as other regulated markets, we will look at options for licensing it to somebody, because it's a product that will require a large field force in excess of 1,000 people. And that's not the plan for us to do. So our objective would be to develop it at up to a level and then look for a licensing partner. I can only say that the early readouts that we are getting in the clinical trial in terms of everything, in terms of weight loss, in terms of triglyceride reduction, as well as in terms of potential effect on HbA1c, but it's very limited because these are all healthy subjects. So we are quite excited with the profile that the product has demonstrated to now.
And just one last clarification. The reason I asked is because we launched in Japan. The ROW dollar term revenue has been going down. Has it not kicked in meaningfully, or is it because of other reasons that the ROW or it'll take some more time? Because I remember last time we did speak about it's going to take a couple of more months to a year to get the whole hospital business in Japan done. So we'll just throw some light coupled with the fact that ROW revenue on dollar term is going down. Maybe just review, just thought process. Thank you. That's my last question.
We're talking of sales going down in Japan.
No, I'm talking about the reason I asked about Japan is because the ROW market, the dollar revenue is going down from 178 to 173, 163, in spite of us launching in the product in Japan. So, is it going to take us more time, or has the product not picked up in Japan? I'm just trying to understand coupled with the ROW numbers, if I'm thinking of correctly.
No, I think introduction of a product like Ilumya in Japan will not be a huge impact in the first initial period of launch. So you should not look at the first quarter impact of the product in terms of sales. We believe that over time it will become an important and meaningful part of our business in Japan, and that's the focus. The overall rest of the world market, Japan is an important component, but there are many other geographies which are also important in terms of size. So,
sure. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, sir. Thanks for taking the question. Sir, on the US business, two parts. One is on the generic side. If you take a 2 to 3 year view, broadly speaking, is a large chunk of our growth in this business largely contingent upon the approval that we get from Halol, or there are other drivers in the business possible?
Okay.
Sorry, I was on mute. I think your question is more to do with new product introduction, right?
Yes, I'm just trying to understand in terms of when you look at the generic business, what is going to be the driver? If it's going to be new product launches, is it largely going to be the Halol driven portfolio?
I think new product launches clearly are important to be able to continue to find ways to grow the business. And if you see, despite Halol not having been inspected, in the financial year, we were able to launch around 18 new products, and also a few relaunches. So there are different avenues by which we will be able to bring out new products from different facilities. It's not only Halol dependent.
And secondly, on the US specialty business, again, we take your same broad brush to 2 to 3 year view. Is it fair to say that the current portfolio of products that we have will largely continue to drive growth for us, or there are possibilities of product portfolio additions meaningfully contributing over this time frame?
So first of all, I think the current portfolio that we have, we can still optimize and do better, and there is clearly headroom for us to grow with the current portfolio. And in addition to that, as I said earlier in response to one of the questions, I mean, it is any company which wants to grow in the long term will continuously look at opportunities to develop its business and look at any inorganic way of growing the business. So it's a combination of both. But clearly, the products that we have in the basket today have a lot more headroom to continue to grow.
And lastly, Shani, you mentioned about the vaccine. We're not doing anything on the vaccines currently. But so from a capability perspective, do we have capabilities to do drug substance manufacturing or to do a fill finish? Given our very extensive manufacturing network, are there capabilities inherent in our network to work on this?
I think our preliminary assessment indicates that vaccines will require a dedicated manufacturing facility, and it cannot be produced in a facility where you are making multiple other products. In addition to the specific different design for those facilities depending on the type of vaccine that you are producing. So that's broadly our understanding. So we currently don't have any facility which we are looking at for producing vaccine.
Okay. Thank you, and best of luck.
Yeah, thank you.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Good evening, and thanks for taking my question. So first, on Cequa, so there could be a likelihood that there might be a restructured generic maybe later this calendar year. So I'm wondering if you could share your thoughts on how this potentially could affect Cequa uptake.
So we still have no visibility on when the generic.
Okay.
So it could have been launched a year and a half, 2 years ago also, but we haven't seen it. So to put a timeline to it and therefore look at a preemptive situation is pointless because we don't know when it's going to get launched.
Right. Okay, fair enough. So the second question is on Exorica. So with this product now going generic and obviously, with price erosion becoming cheaper, do you see that the Exorica market, including generics, could show higher volumes, maybe at the cost of some brands of Teva or Mylan?
Sorry, you completely.
So
brands of what did you say?
So I was saying, with Exorica going generic now, obviously becoming cheaper, do you see this market expanding at the cost of, Teva and Mylan's brands like Amstel?
Personally, I don't believe so because isotretinoin in moderate to severe. So first, generally, we use other options before they go into isotretinoin. The direction of Exorica, I don't think the market really will expand. That's my view, though.
So, Abhay, what I understand he is asking is that whether the overall share of Exorica or Exorica generic in the isotretinoin market.
So my answer was in the same line, that if I look at TRX, forget the value of the TRX, whether it's a brand use or a generic use, will the number of TRXs for isotretinoin increase because there are generics available? I don't really believe so.
Okay, sir. That's helpful. Thank you very much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Nimish Desai for closing comments.
Yes, thank you everybody for taking time out to join this call. If any of your questions have remained unanswered, please do send them across and we will have them answered. Thank you and have a good day.
Thank you.
Yeah, thank you.
Thank you. On behalf of Sun Pharmaceutical Industries Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines.